Wait. Don't create that LLC yet. Watch this first. You may not need it. Hello and welcome back to the Do Business Show. I'm Todd Frazier, your host, and I'm really glad that you're here. Now, one of the big things we talk about with all of my clients and on the show is the best way to run your business, because what do? We do business. That's right. But specifically, one of the things that people tend to do, and I just had a conversation with actually a high schooler this last month about wanting to start a business, and one of the first things that he said was, "Yeah, I'm trying to save up money to start my LLC so that I can start my business." The perspective that he had was to start the business, he had to have the LLC. Absolutely not true. And I had a great conversation with him, and I'm excited to see what he does in his future. He seems very entrepreneurial, and I'm excited about those kind of things because I love business. But there is there seems to be an idea out there that you have to have an entity to start a business. And that's completely not true. And I'm going to tell you why in this video and give you some ideas on where that threshold is to say, okay, I need to start thinking about an entity. What kind of entity makes sense for me? And then how best to think about that moving forward. This is purely from a tax and business operations standpoint, not legal. So if you're looking for legal protection from some sort of entity, I'm not the guy. You need to find an attorney to be able to get that information for you. All right, so here we go. When you're starting a business, the first thing that you need to do, absolutely, before you do anything, don't create an LLC, don't do anything like that. You need to get organized. You need to get organized and get your ducks in a row. Let's just say it that way. Get your ducks in a row so that you know what's going on, and then you can evaluate when it's the right time to create the entity. So first things first, whenever you start a business, regardless of what kind of business it is, you need to create a separate bank account. It can be a personal account because it doesn't need to be a business account. And a lot of times you can add a personal account at your bank and it's free, and you don't have to go through all the hoops of creating a business account because you're required with a business account to have some sort of entity or EIN created with that so that they can justify a business account. But you don't need that. You don't have to have a business account to run a business, but it is important. And I think one of the first steps is to create a separate bank account from your personal bank account so that things don't get convoluted and confusing, especially when it comes to tax time, so that you can come to someone like me and be like, hey, here's my bank account. I've got my transactions in order, and this is all separate. There's no personal items in here. Maybe a few, but not a lot. So that's first thing, create a business bank account. And if you want to use a credit card, create a business credit card, or at least use a separate credit card from whatever you're using for your personal. That's usually the first step that I always tell somebody is have some sort of separation between your personal finances and your business finances, just so you can have a clear delineation of what's what. Next after that is you need to track your transactions, track your cash in, cash out, your expenses and your income. And the first step is the bank account. The next step is some sort of software, whether you use QuickBooks or Xero or a spreadsheet. Either way, you need to use something so that you can track what your income is, what your expenses are, so that you can know how to plan whether you're doing good or whether you're not doing good, or how you can strategize with growing your business and things like that. But have some sort of software. QuickBooks, I love QuickBooks Online. It's one of my favorites. It's always my go-to. Xero is a really close second, and I have clients that use both. So whatever your preference is, Xero is a little bit cheaper usually, but kind of the industry standard is QuickBooks Online. And I usually recommend that first. Now it does cost, so that is something you have to take into account. So if you're making, $100 or a couple $100 a month, don't go out and get QuickBooks. That doesn't make any sense. Just have a separate bank account and use a spreadsheet just to kind of track what is expenses that are deductible, and then what is your income number that's coming in. And then after that, it's time to start thinking about whether you should have an LLC. So that's like first step is bank account. Second step is some sort of software. And after you've run the business for a while, then you start thinking, should I get an entity? And the biggest reason that you should not get an entity is because first of all, there's cost to it. And then there's organizational structure that you have to adhere to. And then there's additional tax filing requirements for the most part. Now, just in general, if you create an LLC and you're the only member of the LLC, it's what's called a disregarded entity. And technically, it's no different from a tax perspective than just having a sole proprietorship and getting an EIN. Yes, that's right. You as an individual with your social security number can go to the IRS website and for free get an EIN. It's a employer identification number, separate from your, or connected to your social security, but different than your social security, so that you can fill out W-9s for vendors and customers and things like that, anybody you would need to use. So you're not just putting your social security out there. That's a good thing to do. And you don't have to have an entity to do that. So you have an LLC and you're the only owner. It's called a disregarded entity and it's taxed exactly as if you didn't have an LLC. So the only reason you would get an LLC just for the purposes of an entity would be so that you had some sort of legal protection. Again, I'm not an attorney. I don't know how that all works, but I know that they do exist and you have to handle it a certain way. So go talk to an attorney about that. From a business operation standpoint, the only reason I recommend getting an LLC is if you're going to select to be taxed as an S-Corp, which you can do with an LLC. You don't have to be a corporation entity. Corporations have more requirements as far as operationally and documentation-wise and procedures and things. An LLC, much less strict, much easier to operate and create, and you can choose to be taxed as a corporation. Now, you might be saying, well, why wouldn't I just do a corporation instead of an LLC? Great question, but I just told you it's more expensive typically to create the corporation. It's a lot more robust and more difficult to operate than an LLC, and you can do whatever you want. I'm not here to tell you you can't create a corporation. Go right ahead. But it's easiest to start with an LLC. Now, when we get into the reasons that you create an LLC and you opt to be treated as an S corporation for tax purposes is almost singularly focused. And it is this: as a sole proprietorship with a Schedule C on your tax return, all your net profit is subject to what's called self-employment tax. And that is 15.3% of your net earnings. You pay self-employment tax to the IRS on top of whatever your income tax is that you're paying on that. So if you have $100,000 of net income, you're going to pay 15.3% on that net income, and you're going to pay income tax on that income. So it starts to add up really quick. And because of that, there's a dollar amount threshold that I feel is the most reasonable when you should think about getting into an entity. So if we just look at these side by side, typically my threshold tends to be about $100,000. It could be a little bit less, it could be a little bit more, but usually it's right about $100,000 of net income for whatever business that you're running. So you've been running your business quite a while, or you have some sort of fantastic skill that people are paying you a lot of money for, or you're an athlete getting NIL. We're going to make another video about that. And you need to think about how you can reduce your tax liability in all of this. So this side-by-side gives you someone that's a Schedule C, or you could be a sole-owned LLC as a disregarded entity filing as a Schedule C, which don't do that. And then a S-Corp treatment. Whether you're an LLC or a corporation, you're treated as an S-Corp for tax purposes. All right, the first line, so we got net income of $100,000. You did good. Good job. Clap. Good job. Good job. Subject to self-employment, if it's a Schedule C, sole proprietorship, all $100,000 is subject to self-employment. And I believe the maximum for this year is around $180,000. This is 2026 when I'm making this. So for tax year 2026, it's anticipated to be about $180,000 is where the threshold of self-employment tax kicks off. So in the Schedule C, sole proprietorship, $100,000 net income, you're subject to, it says payroll tax here, but it's self-employment tax is what that technically is, of $15,300. And there's no distributions, nothing's distributed. It's all your money the whole time. There are no California S-Corp taxes, and there is no cost to process a corporate tax return. Now, flip to the other side. We've got an LLC, and we've elected to treat it as an S-Corp for tax purposes. Same $100,000 of net income, but we do a reasonable salary, which is required reasonable compensation for all owners of S-Corps, LLCs, corporations, all that. we calculate based on your industry and what you do, what a reasonable salary would be. In this scenario, I typically use about 50% is rule of thumb. So $50,000 of salary, that $50,000, you do pay payroll tax, Social Security, Medicare, the employer and the employee side, which is that 15.3%, which is where the self-employment tax comes from, which means in scenario B, you would be paying $7,650 in, call it self-employment tax, but it's technically payroll tax in that situation. Then you have distributions of $50,000, or it's just sitting in your bank either way, but you still pay tax on the net income, even if you didn't distribute it to yourself. Then California Franchise Tax Board requires an $800 franchise tax fee to have an entity in place. This is where the fees start to become important. So creating any entity in the state of California, you're required to pay $800 every year, whether you make money or not. That's an expense. And if you're just getting started, a lot of times it doesn't make sense to do that. And then it's $800 or 1.5% of your net income is the tax. So you can say, in this scenario, $50,000, 1.5% is not greater than $800, so you're going to pay $800. Then you have to have a CPA prepare a corporate tax return. Now, for me, my minimum for corporate tax returns is $2,000. So out the gate, if you have an entity treated as an S-Corp, it's going to cost you $2,800 just cost, which is why I say there's kind of a floor for this to make sense. So if we just ballpark this, if you have $100,000 of net income as a sole proprietorship on your Schedule C, if you're a sole-owned LLC, remember you're a disregarded entity and you still are running it as a Schedule C, you're going to pay $15,300 in self-employment tax. And then you're also going to pay tax, income tax bracket on whatever your net income is, plus your other income and things that come through on your tax return. If you're elected as an S-Corp, for tax purposes, you're only going to pay $10,450 for taxes and for your preparation and to the state of California or whatever state you're in, which means you're going to save $4,850 in taxes just on self-employment alone in an LLC treated as an S-Corp for tax purposes. That is why you would want to do that. You don't want to start there. It's not the place to begin. It is a place that you get to when you've been running your business for a while and you're actually making good income. That's where you get to. But to start off, the perspective should not be, I'm starting a business, let's create an LLC. It doesn't make any sense. However, there is a point where it does make sense, and it's a calculation that you should take into account after you've created a bank account, you've got some sort of software that you're tracking income and expenses, and you know exactly where you're at to know if it makes sense for your business. And if you need help creating LLC and electing S-Corp status, I'd be happy to help you. You can come visit us at frazinc.com, frazinc.com, set an appointment, and we would love to help you. Until next time, I'm Todd Frazier. This is Do Business, and go do business.